Did you send it to Cody already?
I just emailed it. Yeah, and I'm gonna text it to him too.
I'll text him and-
It's the link that's in the calendar because it's the agent partner. It's our standard link. Okay, put this on for you. I'm sorry.
Yeah, no, that's great. No, super, super. Got it.
Okay.
All right. There's more copies of the handouts coming, so Rebecca will bring those in just a few minutes. And I just want to say good morning. Thank you very much for showing up today. We're going to talk about foreclosures and short sales. Before we get started, I'm Kathy Shalosky. I started in real estate in 2010, the beginning of 2010, right in the middle of the housing crisis. Right, the market had just dropped out about 2008, started in 2007, 2008. The market was at its lowest point when I got in. I just looked at the stats, and I think our average sale price in the greater Tampa Bay area is about $477,000 right now. At that time, it was $135,000. So commissions were not even a third of what they are now. We worked really hard. The properties that were sold were 1/3 short sales, 1/3 foreclosures, and 1/3 regular sales. Who did not get? Oh, there we go. Anybody else? I'm good right now, according to it. Yeah. So a third short sales, a third foreclosures, and a third regular sales, or what you are used to doing now. So we had to clean up the market, right? So that's why they were doing these short sales and foreclosures. Most people had lost all the equity in their house. And if they lost their job or had a job transfer or a medical situation, a divorce, a death, they had to find ways to get out of their homes. And they owed more than what they could sell for. So they had to do a short sale, or if they didn't do anything, the bank would, if they didn't make their mortgage payment, then the banks would close. So we had quite a bit of experience. Jan was in the market back then, so she can tell you they weren't fun transactions, and yet they were 2/3 of the market. So we had to do them, or not do anything. And there were a lot of experienced agents who opted out. And so young and, well, not young, new and naive, I raised my hand and said, I'll do them. You know, that sounds, you know, I didn't know the difference. I didn't know what easy was. Some of you that have been in the market for, let's say, 2 to 5 years, this might feel like a rough market because listings aren't selling quite so quickly. Some of them are actually not selling at all, and their listings are expiring or they're being canceled. People are choosing to do other things with their properties. Well, that's normal. This is a normal market that we're in right now. What we were in 2 years ago was not normal. It was great if you had a listing because it would just fly off the shelf, probably for more than list price. We're not there now, right? So this other market, when you get into short sales and foreclosures, not pretty. But we don't have a lot of these. Let's just start with, we don't have a lot of these distressed properties now. And yet we are starting to see them come up. I had an agent call me the other day to help with the valuation on a property. And when I pulled it up, the first thing I saw is that it's in foreclosure. And so I said, hey, you know, the sellers, have they gotten up to date on their payments? And she's like, what are you talking about? Because she didn't know to look for it because we haven't had to recently. So I said, well, they're in foreclosure. So you got to ask some questions. It doesn't really even matter what the value of the property is right now. We need to find out what their situation is to see if we're even going to be able to sell this house. Possible, well, we'll go through all the scenarios, but there's a lot of ways that we can help. So let's talk first about distressed property. You'll hear this terminology, and there's no real definition of it, but we're going to talk about distressed properties and what they are, what part we play as real estate professionals. So they can include foreclosures and short sales, which are also known as pre-foreclosures, tax deed sales where someone hasn't paid their property tax, abandoned properties, properties in poor condition. This term distressed properties can cover a lot of these. What we're going to talk about today, though, are foreclosures and short sales. Couple of definitions as we get started. Lien, that's a legal claim on a property that's used to, that secures the debt, right? So a mortgage is a lien. If somebody can put a lien on a property for a variety of reasons, there's different types, there's mortgage liens, there's tax liens, and that could be an IRS tax lien, it could be a property tax lien from the county. HOAs and condo associations can place liens on property if their dues aren't paid. There can be a mechanics or a construction lien. So when you have a roof put on a house, typically they'll put a lien on it until that's paid for, then they remove that lien. There can be judgments against a person that can be placed against the house as well. There are laws that dictate which of these liens can actually be foreclosed based on whether it's a primary residence and some other things. So there you get some legal issues there. I just want you to know that there are different kinds of liens. And then there's something called subordination. That's the ranking of those liens. So the order, like if there's a first mortgage and a second mortgage or a HELOC, a home equity line of credit, something like that, that first mortgage, that primary mortgage is going to be the first one paid out. If something happens with the property and it's foreclosed or sold, then that one gets paid first. That changes when you're doing short sales because there's all these negotiations going on. But if somebody forecloses, now it can be different. If an HOA forecloses, they might get all their payments first and then that bank will have to foreclose on top of that. So it's a complicated process.
If there's any government, they come first.
Possibly. There's some, I don't want to say anything specific about which liens will come first, because sometimes it's the way it's written, sometimes it's a statute that governs it, right? And sometimes it depends on the process that it's going through. Generally, the primary or first mortgage is in the first position, and yet property taxes are going to get paid no matter what, right? So really, they're kind of first, right, as far as mortgages go. So again, not here to worry about how that works exactly, because it can be different with every property. Just know that there is this idea of subordination, and it becomes most important when we talk about short sales. Good so far? Excellent. Now, I'm going to take a quick break here because I meant to ask this in the beginning. We had people coming in and out and then trying to get the Zoom started, and I did not ask it. Does anybody have any specific questions that they would like to have answered during this class? You're welcome to ask questions as we go along, and I'm going to cover a lot of stuff. Is there anything burning that you want to know? Yes.
Other than what process we have to go through if we're dealing with a short sale, where you have to get signed papers from the
Yep.
seller to be able to contact the lender, talk
Right.
to them,
Yep.
things like that.
Okay, we are going to touch on all those for sure. Anything else? Nope, good? Okay. Well, let's talk about foreclosure first. Foreclosure is the legal process by which a lender or other lien holder seizes and then sells a property when the borrower is unable to meet their repayment obligation. So basically, the homeowner doesn't pay their mortgage, let's say, right? And the lender says, well, we're going to take it back. But it's in Florida, it's not like repossessing a car where you could just go get it. Yeah, we are what we call a judicial foreclosure state, meaning it has to go through a court process. It will take generally a minimum of 1 year to go through that process.
Okay,
That's if everything goes smoothly.
all right.
I
Well,
have
and
seen
then Crystal's on.
situations where people
So, I
have
don't know.
stayed in their house in foreclosure, not making mortgage payments for 7 years.
Sometimes, do you have any idea why it takes the bank so
Well, it's not just the bank, right?
the attorney?
So it can be the attorney, it can be legal issues, and if the homeowner has an attorney working for them to try and avoid foreclosure, they can drag it out. Part of what they do when they go through the process is they look at, this is what happened back in the day. So like in 2003, 4, 5, 6, probably really 2004, but 6, 7, they were building so fast, selling so many homes. the mortgages were no interest, no doc loans, all kinds of crazy stuff going on. Second mortgages, third mortgages, and everything was getting so filed so quickly. And then it changes hands, right? Anybody have a mortgage that got sold to another mortgage company? Changes hands. Almost always, if you go with a mortgage broker, they don't keep it. It sells right away after closing. And then sometimes, a few years down the road, it gets changed to somebody else and somebody else. Well, all this shifting was going on back then. And they didn't always keep great records. And so if they didn't get filed properly, then sometimes the attorneys could look at that and say, hey, that document doesn't exist, or it doesn't show the actual transfer, or it doesn't have the right signatures on it, or whatever. And so that they couldn't do anything until they got that straightened out. Now, they later had some legislation that was put in place, because at first it was like, okay, well, they just get the house for free then because it wasn't filed properly. Well, that doesn't really make sense, right? So they kind of worked around that with some legislation, but it did take a long time to get through. A year would be a fast foreclosure in Florida.
Wow.
It's probably going to be more like a couple years.
I
And
don't
they
know.
start with a process called a list. So first of all, the homeowner doesn't make their payments. They generally have to be in default for at least 90 days before the bank really takes any action. And sometimes it's 90 days, but sometimes it's 6 months before they do anything. The first step legally will be to file something called a lis pendens, and that's not up there, but it's spelled like this. You might see it when you're looking in the public records. Uh-oh. I don't know why that happened. Okay, so lis pendens. It's basically a notice, a legal notice that they're going to foreclose. It is not a foreclosure. It's just a notice saying we intend to take the action necessary to foreclose on the property. The foreclosing is just them taking it back so they can sell it and recoup the cost, the whatever their principal is on that mortgage that's due, or whatever else it happens to be. It could be HOA, could be a property tax lien. They can foreclose for any number of reasons. So they file this lis pendens. When they do this, this shows up in the public records. It's in the court records, the official records. You can find it on IMAP. If I know how to look up, some of you are brand new, so you may not know, but you know how to look up IMAP. If you go to a property on IMAP, it'll tell you right there if there's a lis pendens file. Like I said, I had one the other day, and that's how I saw it. I pulled up the IMAP for it for this agent and was looking to do evaluation, and I could see the case number and all that, the foreclosure there. So there is a hierarchy that we mentioned before that governs the order in which lien holders are paid. That's the subordination. And Florida is a judicial state. So if you look at this little chart, it kind of shows you the basics of what happens. Borrower stops making mortgage payments. Then the lender takes possession of the house, but they can't just go get the keys in Florida. It's this judicial process they have to go through. The first step being filing the lis pendens. Then they have to file a judgment. The courts have to agree to it. If there's anybody fighting it, it's probably going to be drawn out, and it can take a while. Eventually, the courts will say, yes, we are going to allow this to go through a judgment. We're going to set a foreclosure sale date. Now, just so you know, in most cases, if it's a foreclosure sale,
Thank you for calling Foreclosure
I know
team.
that property on the courthouse steps isn't just like
Hey,
sending
I'm well. How about yourself?
property. It is
Ooh,
going to be at a price because they're going to take whatever the balance is due, the legal fees, interest owed, all of that stuff that's accrued over the few years that this process has been going on. And that's going to be the sale price for that house. Well, nobody's going to buy it at that price because it's not worth it, right? The bank is just going to get to take it back. That's what happens. So they call it a foreclosure sale, but it's probably not actually going to sell like that. It's probably just going back to the bank, to the lender. Okay? Now, there are some courthouse sales that work differently that might be able to. And we're in a weird situation right now because you do have a lot of people who have equity in their homes that they bought several years ago. So there's always the possibility that if they are in trouble not making their payments, they might still have enough equity to be able to sell the house, right? So So if they do, they should just sell the house. Problem is, most of them don't know what they're gonna do when they sell the house. Okay, I sell it, even if I break even with all the fees and, you know, the attorney's fees and the commissions and the closing costs and interest that was owed for the months I didn't pay or whatever, they don't know where they're gonna go, so they just sit there instead because they're paralyzed, right? They're like, I don't have anywhere to go. Yes,
In the courthouse steps foreclosure sale, is the bank required to do that? If it's at a price nobody's gonna buy.
as far as I know, it still shows as a foreclosure sale. I don't know what the actual practice is, if it's a certain price, if they, because they don't really do it on the courthouse steps anymore, that's what they always
Right.
just say. But it's set up in the county system, it's all an online system now, I think. So I don't know if they have a foreclosure sale date, so yes, something happens. I just don't know how public it is. But they do still set up the foreclosure sale date.
Yeah, it's there and it's also online as well.
Yeah, it's online,
it's-
but I don't know, to her point, if they have to sell it for 600 to recoup their losses and it's only worth 450, see, nobody buys it, right?
Yeah.
And some people will, though. We had a house in my old neighborhood that somebody bought at a foreclosure sale, not realizing that they were buying all the other debt that came with it. That's where most people get in trouble, because you're buying everything. So you gotta be really careful with these kinds of things. Don't just say, oh yeah, this is a cheap way to get it. Sure, you bought the house for 200,000, but did you know there's a $10,000 HOA lien? And did you know there's a second mortgage? And so all these other, you know, liens can be foreclosed on too. And the new owner doesn't necessarily have any protection. Now, there are some, and some of these may have changed, I don't know because we haven't done many of these in the past several years. But there used to be some things like HOA liens, could only be paid off for a year. So if they had not paid their HOA dues for 3 years, then 2 of that got wiped out, and the HOA would get paid for 12 months worth. That would happen on a short sale as well. Not sure what it is now, if they're even, I mean, that should still be in place, but again, I haven't had to do one in a long time, so. Okay, so lender takes possession of the house. Then the bank or lender is gonna sell the house to recover the debt. And then if there happens to be any money left over, depending on what kind of sale this is, then other parties can make claims on that money. Any other liens in place, the homeowner, if there happens to be any left over. So you could have a situation where somebody owns their house outright, but they don't have any income or don't have enough income to pay their property tax. And then the county could sell the property for the property taxes. Now, there's a tax deed sale that happens first. Not gonna get into all that today, it's not what we're here for, but they could do that, and then the property could be sold to pay off that tax deed. Or just if nobody buys the deed or the tax deed on it, then they could just buy it, sell it, and pay the property taxes. Then there's money left over, right? Then the owner just petitions the court to have the excess returned to them. Okay? But usually what we're talking about for our purposes in real estate is a property where there's not enough money there. Right? Okay, so selling foreclosures. So this is the one that everybody thinks they want to do, right? Anybody want to sell foreclosure homes? Especially when there's a lot of them. They're like, yeah, I'm going to talk to the bank. I'm going to get all these listings. Because those agents would have tons of listings, foreclosure agents. They might sell hundreds of homes at a time, right? Now, a couple things to know. Real estate agents can assist once the bank repossesses the house. Then they can list the property for sale. That's typically what happens with a real estate agent. But what you want to know, and sometimes those are sold through the MLS, quite common, but also there's some auction websites out there. Sometimes they're sold through Hubzu, auction.com, and some of those kind of sites. Just so you know, it's not easy to get into selling foreclosures, listing them for, this is the point where the bank has repossessed the home, they are the owner now. It is very difficult to get into that market. You typically have to have some kind of connection with the bank or someone at the bank. And then You have to have experience, you have to have sold a lot of properties, because they're gonna vet you against other agents. And you have to have systems in place to run a lot of transactions at one time. Also, the commissions are typically less, because they're giving you volume, so they're gonna pay you less to do it. And the listing agents typically are taking care of all the cost of maintaining the property during this time. So move, clean out, because people sometimes just abandon properties and there's all kinds of stuff there. Clean out, if you were in another state, winterizing, the cost of utilities, maintenance, repairs, all that stuff typically the agent pays for. They get reimbursed, but it's not a quick turnaround. You're probably looking at least 60 days on a turnaround. So for most people, this is not the business you want to get into. Probably you're not going to get into it, but what you will get is a bunch of emails and traffic saying, hey, let us help you, list foreclosure homes. It's all BS. Jan, all BS? All BS. All BS. Don't do it. Don't pay anybody any money to help you list foreclosure homes. That's never going to happen. If you are running a big business, David probably, with the number of listings they have, some agents who are in here selling a lot of properties, they probably have a better chance if they choose to do it of getting into foreclosures. Not everybody wants to do it. Most people get into real estate because they want to help people. They want to sell houses. They want to make some money. You're not going to be working with people. If you do foreclosures, you're going to be working with the computer, and you're not going to be a nice person. You're just going to say, yes, no, yes, no, yes, no. And you're going to be in the systems, putting in all the data. You're going to just be working in the background, right? This is not a people person job, being an REO, what we call REO listing agent. So REO means real estate owned. So a lot of times you'll see REO agent, REOs for sale. So got those. So the lenders, many, especially the larger banks and lenders, have their own purchase contracts and what they call real estate addenda. It's really just a replacement for the contract. So they'll want, now occasionally smaller banks will use the Florida contracts, but they have these other ones. Just so you know, they've got different documentation. The properties are sold as is. That doesn't mean they will never do anything, but it's not like our as-is contracts where we say, oh yeah, it's as-is, but they can still ask for stuff. Unless it's something that's probably going to cause them not to get insurance or financing, then don't ask for it. You take it as it is. The banks typically provide no disclosures. Now, should they? Somebody's been in that house and probably knows something about it, so they probably should provide something, but they don't. And they get away with it. So just FYI. The lender is the seller at this point. They have foreclosed on the property. They own the property, so they are the seller, and they negotiate with the buyers, right? There's no there's not a person homeowner behind there. That's the difference with short sales. I'll show you that in just a minute. Good with this so far, kind of? All right.
So Kathy, so the agent basically doesn't even negotiate with the buyer, so the agent's just there to.
No. The agent, no, that's not what I mean. That's not what I mean. The two parties to the contract are the bank or the lender
Okay,
and the buyer.
so you
You'll
negotiate
see-
on behalf of the bank.
Hang on to that question for just a minute. When I talk about short sales, you'll get what I'm saying. Okay, so real estate, but now let's look at, I kind of went ahead on this because that was the listing foreclosures part, and I was talking more about that. This slide is actually for selling foreclosures. Now, as real estate agents, you can sell foreclosure homes to buyers, okay? They will be in the MLS most of the time. Occasionally, they're on a website. If they're on an auction website, though, you got to check and see if there's a commission paid. And now we're going to have to check and see if there's a commission paid no matter what, because we're going to stop putting commissions in the MLS. So, but typically in the past, what has happened is they've been on MLS. There is a search field when you are in the MLS that is for REOs and foreclosures. And there's one for short sales as well. I'll show you that if you don't know where it's at. So when you're selling them, you're representing the buyer, And you're gonna work this like a regular transaction, except that you're gonna notice that the REO agents, unless they're new, not a new agent, but new in the REO business, are not going to be very responsive. And you're gonna have a hard time getting a hold of them, and don't call them on the phone, only do email, right? So because they're running multiple transactions at one time, they don't have time for BS. Do you have any other offers? You know, all those kind of questions, they don't wanna hear that. Just send it in.
Okay, so then on the selling side,
Yeah, I'm sorry, I flipped my slides around.
how do we, when you said the lender-specific purchase contract?
Yeah.
So,
They'll give it to
do they
you.
have it listed
So
usually in
two
like
things
the
that
realtor
happen.
remarks?
Sometimes it's an attachment, and it's
Okay.
already there, and you'll be able to see it.
Okay,
Sometimes it is, you will do a Florida contract to start with, and they will send back their real estate addendum, which their real estate addendum is not like a one-page addendum. It's multiple pages with all the same clauses that are in our purchase contract.
Okay.
Good?
yes,
Okay, so they'll tell you what you need
perfect,
for that.
in the remarks usually.
Sometimes in the remarks, sometimes it's an attachment, it just depends. And again, there's not enough of them out there now to really say consistency.
Yeah.
And just remember, each lender's different. Like, the reason they have their own is because most of these lenders are national, right? They may not be in every state, but they're in a lot of states. So they don't care about a Florida contract.
Right.
How many contracts do we have for residential real estate in Florida? Three contracts plus multiple addenda, right? We have 3 potential contracts that we could use. Now, 50 states, let's say they all have 3, that's 150 different contracts. They don't want to deal with that. They have somebody off in Texas looking at everything, so that's why they do the real estate addendum. That way it is consistent and standard for their company. And so they use the same thing for all their transactions. Now, has anybody sold new construction? Have you read the contract?
No.
Who does it favor?
Build the
The
building.
builder, right? Same thing. Same thing if you're doing a foreclosure sale, if they have their own contract or real estate addendum, it benefits them. Our Florida contracts really benefit the buyer, right? The buyer has lots of ways to get out of the contract. The seller has no way to get out of the contract. Unless there's not a clear title, then they can back out. But other than that, there's really no reason. The buyer has to be the one to force the issue on terminating a contract in Florida. So so what do we do with the contract that we haven't seen before?
Read it.
Okay, good, read it, and
Have Maureen look over it.
Murray's not gonna do anything about it. Murray's not gonna do it. This is not Murray's job, right? If a buyer can read it themselves, but we have to be really careful and tell the buyer, hey,
Have an attorney.
this is it, that's right. This is their own contract. It is not our Florida contract. I am trained on our Florida contracts. You need to read this carefully. Make sure you understand all the terms. If you do not understand all the terms in this document, what should you do? Consult a licensed Florida real estate attorney, right? And get them to review it for you. Now, the problem with consulting attorneys is they want to like fix things, change it, but the bank will not accept any changes, right? They have blanks that you fill in, and those are what they take. They do not, you can't scratch out clauses and you can't strike anything, you can't add additional terms in there. They don't do that. So this is kind of an all or nothing, just like with builders, right? Pretty much an all or nothing. So you got to tell your customer, hey, you either agree to their terms or you don't. That's okay. You don't have to, but this is the way it is. Okay, so that's the selling part. Then again, the listing part, I already mentioned they already have established agents in there usually. Systems, tools, and people. So one thing I did not, you just want to make sure if you were getting an REO business, right, from a lender, then you have to have enough people in place. You have to write the right systems and tools in place to be able to run multiple transactions, sometimes 100 at a time when the market's flooded with foreclosures. And then sometimes the lenders there's a system, there's more than one, but there's a big system they used to use called Equator. And a lot of lenders use that for their foreclosures and short sales. So if you were buying a foreclosure, you probably didn't have to do anything, but the listing agents used Equator to send information back and forth between the lender and themselves. And then if you were a short sale listing agent, then you also might use Equator to submit everything as well. So sometimes they have their own systems.
So to clarify, for us to become a listing agent on foreclosure, it's really a relationship with the lender.
The relationship with the lender, and so if you were, I know an agent who was not that experienced, who got one foreclosure listing from one very small bank locally because she used to work at that bank. Okay? One out of
Yeah.
tens of thousands,
But
right?
they usually have their established.
Yeah, so the bigger banks especially, if they are coming, let's say they were starting to come into a new area, they're gonna see who's already established. They're not gonna say, oh, hi, Mary, new agent that has had your license for 6 months. How would you like to take on this humongous business and we're gonna trust you with it? That doesn't happen. They're looking for somebody that's got experience,
But
who
our,
will work for a lower commission because they've got volume and who has enough finances, sufficient finances to be able to maintain the properties until they can be reimbursed.
so the more realistic expectation is buyers from, as we're representing buyers. Hey, look,
More
it's-
realistic, you will sell foreclosures to buyers. Absolutely, 100%. Okay, so, and the big thing at the bottom of this one is understand what you're selling. These are different, right? They're different than regular sales. Okay, let's talk short sales, because this is where we can really get involved on the listing side when these happen. Short sale, the transaction in which a lender agrees to allow property to be sold and take less than what is owed to satisfy the mortgage lien. They're also known as pre-foreclosures. So sometimes you'll say, hey, somebody called me about a pre-foreclosure. A pre-foreclosure is still owned by the person or entity that owned the property. It hasn't been repossessed yet, okay? It hasn't been foreclosed. The process might have been started, but it's not finished. So if I owned a home and it was a pre-foreclosure, it would still be in my name. Okay? It may be a more favorable option for a homeowner. So typically, a short sale on your credit is better than a foreclosure on your credit. It usually comes off sooner and doesn't have as big an effect. Okay? Yes,
So what does it say in IMAP when it's in pre-foreclosure status?
it doesn't. That's not true. The one I mentioned the other day, it might have a lis pendens there. So here's what happens. If somebody's behind on their mortgage payments, we don't know that unless they tell us, or there's been a lis pendens filed, okay? So we won't know it until that gets filed, and that'll be on the public records.
So as long as it has that, then the seller of the property still has some control, but once it hits foreclosure.
Once it's been foreclosed, then they're gone. They're out of the house, they're gone, they're not on the deed anymore. It's the deeds, it's in the name of the bank or lender, whoever it happens to be at the end. No, go ahead.
Does it show on IMAP when the list pendants was filed?
Yeah, I think it actually has the date on there. If not, you can go to the court document in the public records and see it. Yeah, but I think the date's on there. So it may be a more favorable option. So this is why we talk to customers about it. This one that popped up the other day, my advice to the agent was, go to the seller and ask some difficult questions. And when you talk, do people want to talk about this? Do people want to tell you they're not making their mortgage payments? Do people want to tell you their biggest financial secrets and whatever's causing their, probably not. Some do, some talk about everything, but a lot of people don't. They clam up when these things happen. So as an agent, you can't go in timidly. You have to go in kindly, but you also have to go in because when people get to that point, that's not the only thing failing in their life. Right? Things are going to hell in a handbasket, as they say, right? It's not just the mortgage. If they can't pay the mortgage, they are also having problems in other areas. Maybe it's just financially, but it's probably causing now other problems. Maybe they're not employed, maybe they're getting divorced, maybe somebody's ill, right? They're sensitive situations and they don't know how to get out of it. Otherwise, they'd be out of it. So this is where you can really go in and help. You can kind of save the day, right? Yes, ma'am.
I have a question.
Okay.
In the past, I had a friend that was selling her house,
Yes.
and she was a short sale,
Okay,
but I didn't know this. And
Okay.
so, once I listed her house, maybe she was communicating with the attorney. I'm
Okay.
not sure, but I had no way of finding out what the liens were, so by the
Right.
time that we closed on the house, the title company, everything after it all happened, what she owed was like my commission, so I gave up all of my commission, and the title gave up 1,000, just so she wouldn't go into bankruptcy. But how could I have found out what the liens were? 'Cause
yeah.
I don't know.
Okay, so it used to be that whenever we'd go on a listing appointment, we had a little questionnaire, we'd go through with the seller, how many bedrooms, how many bathrooms, what have you done, what upgrades, but, we'd ask all these questions, where are you moving? So always in those questions back then are you up to date on your mortgage payments? Are you up to date on your, how many mortgages do you have? Because now most people only have one mortgage, maybe a HELOC. But back in the day, there were 3 mortgages sometimes. And negotiating that was a pain. It was sometimes not even possible. But, so you have to ask the questions. How many mortgages do you have? Great, who are they with? Just like, and you say it in casual conversation, not like you're like, I want to know all your personal finances. No, this is part of selling your house. How many mortgages do you have? Great. Who are they with? And are all your payments up to date? HOA, great. How much are your payments on that? Are your payments up to date? So anything you can think of, if they own their house outright, are your property taxes up to date? Well, you're going to see that when you look at their tax bill. You're going to know if they haven't paid their property taxes, right? And when you look at IMAP, you should see if there's been any legal action taken towards a foreclosure. Now, there might not have been, right? So that's the thing. Sometimes the bank hasn't taken action on a foreclosure yet, but they could be already 6 months behind on their payments. So all those payments are behind, all that interest is due, the principal hasn't been paid, there's fees accruing. If they have taken it to attorneys, the bank has taken it to attorneys, there's legal fees on top of that. See, all this blows up really fast, right? And so don't be afraid to ask questions. And if you know there's something going on there, then say, listen, I need to ask you some personal questions about this, financial questions. And I'm doing this to help you. So, please be honest with me. And if you go in with the right attitude and you're serious but not aggressive, then they will tell you. And they'll be relieved to tell somebody about what's happening. Any other questions? Oh, you got a question.
I was gonna say, I know, being at the bank, I work typically deal with some like HELOCs and loans.
Okay.
A lot of times we have issues where you have like liens and tax liens on
Yeah,
properties.
yep.
When it comes down to that situation, would it be bad? Because I know we go to the county website and check and see if
Yeah,
there's any liens.
exactly.
Would it be an issue to go and be found it and brought it up to their attention, or would it be like we're still having that conversation with them?
So you're talking about are you talking about in
It is just
that
in-
banking environment or as a real estate
As a real
agent?
estate agent.
If you find, if I were to find something on the public records that had to do with the liens on that home or something not being paid, I would definitely bring it up with them. Because it's gonna affect, like when you do a net sheet for somebody about how much their proceeds are gonna be when they sell the house, if they haven't paid their property taxes, it's gonna affect that, right? And so the amount that they're going to see in their proceeds or not is gonna be affected by that. So I definitely would tell them to. And so sometimes though, we will see the public records aren't always up to date as of today. Sometimes things take a while to get filed and then get processed onto the website. So it is possible that something's already been taken care of. So you may ask about something, say, hey, it looks like the property taxes haven't been paid on this property. And they say, oh, I paid it last week. Okay, great. We'll just double check that before closing. The title company will make sure everything's paid. If it's not, they'll take it out of the proceeds. But if you're telling me it's been paid, then we'll, calculate what your estimated proceeds are based on that. But you're still asking about, yeah, I would definitely ask them about it.
Some like construction, sometimes they just get filed the judgment.
That's right.
So,
Yeah, there could be a construction lien and it hasn't been removed. So yeah, that's great. Yeah, absolutely. And it might just mean you just haven't taken it off. So, okay, so the short sale is they still own the home, but they need they don't even have to really, sometimes, used to be you had to be behind on your payments for 90 days before they would even look at a short sale. But sometimes you get a situation where somebody needs to move. They got a job transfer, maybe they're in the military, they gotta go, and so they need to sell their house, but there's no way that they're gonna have enough there to sell it. Cause a couple of reasons. VA loans, a lot of times they're rolling in the funding fee, so sometimes, because it's a 100% loan, it could be 100% plus the funding fee, so the loan might have been more than the purchase price of the house. Or it could be that they did put some money down, they have a little equity, but they don't have enough to cover the commissions and closing costs. And they don't have any money in the bank to do it, right? So they still have to have some kind of hardship, and they can't have the money to make it good. If they have $50,000 in their savings account, they're not gonna get to do a short sale where there's a $10,000 loss. They're gonna have to do that themselves. That's not gonna get approved, okay? So maybe a more favorable option, it just depends. You just gotta interview them, you gotta ask a lot of questions. Partner with an experienced agent who's done short sales before if this comes up, and just split it with them, because you're gonna learn a lot, well worth it. If you don't wanna deal with it at all, turn it over to somebody for a referral fee. The process can be lengthy and time consuming. So when we look at that process, first there's a consultation with the real estate agent and the seller. If you decide you're gonna do a short sale, you list the property for sale. There are some additional documents that you use when you do a short sale. When offers come in, then you take the offers and present to the seller. The seller negotiates with the buyer. But remember, they're not gonna get any money. So they're not looking for a hard sell, but we do want to negotiate something that we think the lender will accept. Because then the offer and all the seller's financials go to the lender to approve the sale. So the lender's doing two things at this point. Number one, they're approving the seller for the short sale. So if you're a seller who has a job and just doesn't wanna, you just happen to be in a market where the value of your house is less, we have people doing this, right?
Oh, yeah.
Their house was 500,000 and then it was worth 300,000, so they said, well, I'm just gonna do a short sale. And some of them got away with it. But as time went on, that got harder and harder because the banks got smarter and smarter about what they were doing. So it's not so easy. Sometimes they could do it still. There's like, it's 200,000, I'm gonna cut my losses. Because it took a long time for us to get back to the point where we were. Actually, it was only a couple years ago where we actually made up the difference. So anyway, people will attempt the short sale. They send the documentation, the financial documentation that gets sent to the lender to review, to approve it, is more than if they're getting a mortgage. Has anybody gotten a mortgage lately? Anybody had a customer who got a mortgage lately? You know how much documentation has to be sent in? All that plus more. The tax returns, the pay stubs, the account statements, all that goes in, as well as a worksheet that the seller fills out that shows all of their monthly expenses. And you gotta show that you don't have enough money to pay the mortgage payment with all your expenses. So I've got this, and this, I don't have enough money left to make my mortgage payment, right? So they have to show that. Then they have to send in a hardship letter that tells why they can't make their mortgage payment.
What about assets? Is that factored in, like if they have other properties?
Absolutely. It depends on how they're titled, because that can, your primary residence is your primary residence, and they're not going to make you sell other properties, probably, but the debt on those properties will count towards it. And what matters more is your liquid assets. So they're not gonna touch your retirement savings, probably, but if you just have money in a bank account, an investment account, it's just regular stocks or whatever, or mutual funds or cash or bonds, then they're gonna look at all that, say, what could you liquidate to either make payments on this house, or if you sell it, pay what the difference is, whatever you're short. Why should we take the hit on it if you can actually do it and just don't want to? Right? complicated. So anyway, that gets submitted along with the offer. And then the lender's gonna look at the offer, they're gonna do an appraisal, they're gonna decide if the offer is sufficient. Doesn't have to be exactly market value, it's probably gonna be less than market value. But they're gonna look at the offer and see if they can accept it. And it's not just the lender who's the servicer that you see, like, let's say I send my payments to Wells Fargo. Wells Fargo may not own that loan, there might be an investor behind it. Or it might have to have approval from VA, let's say it's a VA loan, they might have to give approval for the short sale. So there's other investors and people and entities behind that that might need to give approval first. You might get a first line approval from the servicer, but then the investor behind the loan may not give their approval or might have different terms. So all of this takes a while. We used to say that it would take 6 to 9 months for a regular short sale with one lien and add 3 months on for every additional lien. So if there's 2 mortgages or 3 mortgages, I've seen them take over a year before. Now, this is a good time to interject something here. If these become prevalent again, and if you decide to do them, there were companies who did these for you, and then there were title companies who would also have someone on staff that would process them for you. So every time that you have to stay in constant communication with the bank to see what they need and to check up on the short sale process. And the problem is if they ask you for something, like they might have 30 files on their desk, the processor, if they ask you for something, then your file's going to the bottom. And it doesn't get dug out again until you send them whatever it is they're asking for. And so it just takes longer and longer and longer. Now, I will tell you that if you are persistent as an agent, you can probably get these through faster and better than a company that's doing it. Because they also have a bunch of them on their desk and they're just, they're just got sort of a system and a process going. Yours doesn't have any more importance or urgency than anybody else's. If you're doing it yourself, you might have more urgency there. So Bank of America used to be one of the big banks were the hardest ones to get them through. They were just like slow cows. You couldn't get them moving, right? And Bank of America, people hated doing short sales with Bank of America. My very first short sale I did with Bank of America, and I got it closed in 45 days. Or got approval in 45 days. And I think it was actually 40 days, and then closed shortly thereafter. Because I did it myself, and I was on the ball. But if you have a bunch of them, you can't, it's just like when you're a new agent, you can't, if you're not doing anything else, you can pick up your phone every time it rings. And, people think that's great, except that when you've got 20 transactions going, you can't do that as much, right? You've got to get some kind of system where, hey, thanks for calling, I'll return all my calls after 12 o'clock today, or something, or if it's urgent, do that, whatever you do, right? You can't do everything at once. Same thing with if you're processing short sales. So, but I will tell you that if you do it yourself, it's a lot of work and you probably get them done faster and a higher chance of getting them approved because you're being more attentive. And the longer it takes, the more likely people are going to bug out. The seller's going to get tired of cooperating. The buyer's going to get tired of waiting. And so everything, tends to want to fall apart. It takes longer. So faster is better and get it done. Now, what happens during all this? This is the part that I'm not really showing in there, but this is where it takes, like I said, it could take 6 months, 9 months, longer, 3 months, month and a half if you get it done really fast. Submit all this stuff and wait. The buyer's always like really anxious. Do we have approval? Do we have approval? Do we have approval? And the listing agent's going, not yet, not yet. I'll tell you when we got it, not yet. So there's all this conversation going back and forth. At this point, we've had 2 documents that are different for short sales than you use in any other sale. The listing has a short sale addendum that goes with it, and the purchase contract has a short sale addendum that goes with it. And I can pull that up at the end so you can see what they look like. But just to tell you the short sale addendum for the contract basically gives a timeline that says the buyer acknowledges that the seller will have 45 days or whatever it happens to be to get the short sale approved. And if it's not approved, then the buyer can back out. Now, one important thing is, except for the escrow deposit, Nothing else is really due, no dates start until you get short sale approval. So the buyer doesn't want to pay for inspections on a property that it might take 6 months to close, and they don't even know if it's gonna get approval. So
Taking it,
until they get approval.
doing a class on foreclosure.
Like, we can
Through your
I'm
board?
hearing something, but I don't know. I'm hearing something on the speaker. Somebody's talking occasionally, but I can't really hear what it is. Okay, so the process can be lengthy, time consuming, be more difficult. There's multiple lien holders. If there's multiple liens, then you have to go and negotiate with each one. So first you negotiate with the primary mortgage. They come back and they say, okay, we will accept this purchase price, whatever, under these terms. And then you have to go to the second mortgage or to the HOA or to the whoever and say, okay, well, I know you've got this lien, but they're only allowing for $8,000 to go to the second lien. They're like, no, it's $60,000 on the second lien. We want to have at least 40. And then you got to go back to the other one, go back and forth and back and forth and back and forth. So it definitely gets much more complicated if there are multiple liens on the property. Approval is not guaranteed. So even after you go through all that process, the bank might say no because they don't approve the seller or they don't approve the terms in the purchase contract, right? And then one more thing that is not a big, it's kind of up there, but approval is not guaranteed. Terms may not be agreeable to all parties. So sometimes the lender will send back an approval letter, but if the seller has some money, they may not ask them for all of it, but let's say they've got $50,000 in the bank. They might say, we want you to contribute $5,000 towards the sale. Well, the seller said, I don't want to keep $5,000. I'm losing my house, whatever. Hey, you're going to go into foreclosure if you don't. So do you want to get out of this now and rebuild your credit? Or do you want to wait until they foreclose in another 2 years and have your credit shot for the next 2 years and not be able to buy a house again? Right? So weigh it out. Which one is better? I've seen, it doesn't happen a lot, but I have seen multiple times where the lender has asked for a contribution from the seller and the seller has agreed to it because it gets them out of the situation. And they do have the funds available. They don't ask for it if the funds aren't available. They just ask for it. They don't ask for everything. They're asking for some piece of whatever it is. And you're getting $200,000 written off your loan. So what's 5,000? Right? Because that's the thing. Once you do the short sale and it closes, you start repairing your credit.
Like when it comes down to that, cause I know typically after like 90 days or so, you start hitting your credit. So like if you're going to that short sale side of it, is it at 90 days or it's now affecting your credit a lot for most people?
Well, what affects your, two things. What affects your credit typically with either of these is missing payments. That's what hits your credit. And when you have 12 months of missing payments, that's a big ding on your credit, right? You miss one, you get to catch up pretty quickly, and then you can recover and you can bring that credit back up. When you miss a bunch of them, until you start making the payments again, or it's wiped out, then you don't. And then sometimes like foreclosures, you know, you used to say foreclosure stayed on your credit report for 7 years. It varies now. So there's some differences that people go back and look at things. They kind of reduced it to help get people back in better financial shape. So it's not on there for full 7. I don't even know what the number is now. It depends on the kind of reporting that's done. So, but anyway, it's going to stay on there longer than a short sale will. Because a short sale, what it'll say, doesn't say you did a short sale. It says that the lien was satisfied for less than was originally agreed to. So you can tell that something was done there where they wrote it off. Just like with a collection, you know, if you got something that goes to collections and they agreed to take, 20% or whatever, then it can be designated as satisfied for less than what was originally agreed to in the terms of the contract, which you had. Anyway, I'm gonna go back down. So once you get the approval, both parties review it. If buyers and sellers are okay with it, then it goes to closing, just like a regular closing goes. Okay, selling short sales, as a selling agent, working with buyers. So you can assist with purchasing short sales. They'll be on the MLS, sometimes on the auction websites. They use the Florida purchase contracts. We don't have special bank addenda or anything because the bank doesn't own it. It's sold as is. And remember, typically, is a seller who's selling a property gonna wanna make repairs to a property that they're losing? No. So just remember that when you take a buyer in, make sure it's a buyer that can handle that property, right? Seller should still be providing the disclosures, right? Because they own the property, yeah.
Other than when we're sellers or nowadays, how of course, if it's a insurance related thing, roof.
Yeah, so the seller could do it if they wanted to, but most of the time you shouldn't expect that they're going to. Because they're losing the property and supposedly they're in financial difficulties. So they may not want to do it. A buyer could go in and do it.
But it's a matter of getting it, if there's financing, it's a matter of getting an insurance policy,
Correct.
even though of course.
That's what I'm saying. As an agent, don't take buyers to properties that aren't going to qualify for them. Yeah, if it's a short sale,
I
of
know
course.
there's a few insurance companies that'll write a policy without a 4 point, but of course.
Yeah, the rates are higher, then you got to fix it later so that you can get the, yeah, absolutely.
Of course, they have the cash buyer going in to flip it.
Yep, sometimes that's right. Yep, absolutely. And the homeowner is still the seller in
Make sure they ain't internet caught up in these 30,000. Oh, Jesus. That's crazy. Oh, this is ridiculous, yo.
Good luck.
Yo, that's,
Now?
We don't- that's crazy. Yeah, what I'm saying, that's her. Oh, like she is bugging. You might want to tell her though. I was just gonna say, you might want to tell her to hold up because we're not sure like how much she actually sent. That's like a big stack of joints. Oh my God. She gotta chill out, bro. Don't work that too hard, man.
MLS and show you, so you'll see exactly, it'll make it.
I've seen them, I just wasn't sure where the line was with them. and-
Yeah, so sometimes it's blurry, right?
Right.
Sometimes it's blurry. Okay, what were I talking about?
Oh, I'm sorry.
No, I'm just
trying to
messing
not
with
even-
you, I'm just teasing you.
No, I think you're
Yeah,
all set.
am I
You didn't know
good?
you were, but.
Yeah, I didn't know. Okay, so that's the selling of them. Listing short sales, we kind of crossed over on this. They can be extensive, it's, we can help with those. Extensive and time consuming process. Again, you have got to have systems, tools, and people in place. That person it might just be you right now. But you've got to have systems and tools if you're doing a short sale. There is a lot of communication that happens between you, your customer, the other agent, the lender, multiple lenders or lien holders if they exist, and you've got to keep really good records. And you've got to watch your timelines, and you've got to know, don't just, start it and forget it. That's why they took so long, right? If you stay on top of them and check your files every day and say, okay, which one needs attention, then you got those systems in place. And then again, if you're a short sale listing agent, you might be using a system like Equator that I mentioned earlier, which is an online system where you submit documentation, you do some negotiations with the lender or have communications within that system as well. So there may be other systems that they use. Just know that it's going to be different, right? It's going to be different. Yes, ma'am.
I have a question.
Okay.
But I said maybe it was when
restroom.
Okay.
So I don't know if someone already asked this. So if it is a short sale to get paid commission.
Yes.
I'm actually wondering, you know, all of our properties. I'm wondering if like our St. Pete one that we have right now could be a short sale.
It gets built in. So your commission gets built in
Okay.
to the terms that are submitted to the lender. And they approve
Then
it.
the lender then would.
The lender approves because they're the ones taking the loss,
Yeah.
right? So,
So it's kind of like how the bank would essentially pay.
yeah, so they're taking a loss and they're gonna build in what payments are going out to see what they get at the end. And commission's one of them. Now, you could have an agreement for a commission with your seller and the bank might come back and say, no, we're reducing it to X%.
Got it.
And then you just have to negotiate that. And if it's the olden days where the listing side had the whole commission and then shared with the selling side, the buyer's side, then it might end up reducing both sides. You just have to go back to the other agent and say, hey, this is what the bank came back with and we're splitting it. And that's in that short sale addendum that I mentioned earlier. Everybody's gonna know that this could happen as you go along. And again, your St. Pete people might be qualified for short sale, because I've done that before. You could get all the way through and they could have enough to sort of break even, enough proceeds to break even, except for the commission. That's okay, you can do a short sale for the commission, but they have to decide if they want to do that or not, right? The seller, because that's, they're going through a big, long process with the bank to try to get them to pay that. They might want to do it, they might not want to do it, It just depends on the situation. And do they have a hardship? And do they not have the money? Just because you don't have the proceeds doesn't mean you don't have the money, guys, right? Your proceeds might balance out at zero, or you might be in the hole $5,000, but if you got $50,000 in the bank, then you bring $5,000 to close. You secured the debt. You're responsible for it, right? It might come out of the proceeds, it might not. And sometimes we feel bad because, people might be losing money. Well, that's not our problem, right? You can empathize, but you don't own that problem. It's not your problem. It wasn't your problem that your friend, you gave up your whole commission. Did she ever pay you back later?
Oh my.
So you lost all of it. Yeah. See, and that's so nice of you. Are either of those parties suffering because of it?
She says I'm always in repairs.
Well, bless your heart.
Send you a few referrals and maybe I'll forget.
I mean, I've done things, I know she's done things, to help people out, right? In difficult situations. And that is your choice. It's always your choice. And you don't have to. You're a business owner, did the ice cream guy, give you an ice cream? Maybe didn't, because you didn't have the money to pay. So, the what? The bomb. Okay, so what are some options for sellers, right? If they cannot make their mortgage payment or have some other financial distress or have to move, don't have enough money to get out of it, whatever. They have some other options besides foreclosures and short sales. The first thing they might try is a mortgage modification. If they've lost a job, if they've had a cut and pay, if they got divorced and now there's only one person there, there's all kinds of, somebody died, they can talk to the mortgage lender and ask them about doing a loan modification. It could be a forbearance, that's right. So they could have a lower mortgage rate. They could have a period of time where they don't have to make a payment for a short period of time. Usually these things get tacked on to the end. So instead of 360 payment, what?
Say they reduce your mortgage by $100,000, but it's like $100,000 lien that's added on.
Yeah, there's different options there. So some people, now, those mortgage modifications are not always permanent. The first short sale I did, the guy, the husband, lost his job when the economy was going down. He called the lender right away and said, I can't make the payments. I've lost my job. what can we do? And they said, well, we'll modify the mortgage. Your payments will be, $600 lower a month. And then you'll be able to afford them. He said, great. And they did it for 4 months. And without telling him, all of a sudden, sent him a letter and said, okay, everything, we're going back to the original mortgage payment and you have to pay back what we modified for the previous 4 months. He's like, I don't have a job. I can't do it. I still can't do it. Couldn't do it before, can't do it now. That's when he ended up doing a short sale. Now, there's a little lesson I want to teach you real quick while we're on that situation. And I'll show you in a minute. There's some certifications you can get. You can go to classes on doing short sales. You can get some certifications on them, learn a little bit more about it. This was a quick overview. And you can see it's a lot of information, a lot of questions. And there's a lot of things aren't well defined, right? It's a sort of a case-by-case basis. But you can go to classes, learn how to do these. We did that. I came back, got my first short sale listing. There was a referral from an attorney who was doing foreclosure avoidance. Went to meet with them. I felt confident that I understood the process. So I'm a newer agent, but I'm talking to him, explaining how things are going to be. And he's telling me this story about how we tried to do the loan modification and it didn't work out in the end. And now I need to do this short sale. And at the end, he said, okay, he said, we're gonna list with you because I really trust you to do this. And he said, but my broker is going to be mad at me. Your broker, what do you mean? He goes, well, I'm not licensed anymore, but I had a real estate license for a few years and I'm friends with my old broker and she's going to be mad that I didn't list with her. He said, but I don't think she knows what she's doing. But I didn't either. But I didn't tell him that. But I'd had the class and I had tons of people around me that were doing short sales that I could go to for help. So I felt confident it'd be okay. And that's when probably because I was so diligent, because it was my first one, that I got done in 45 days or last 48, whatever it was. Because I was just confident and then diligent in doing what I had to do. And, those people were forever grateful because somebody helped them out of a really bad situation. And that's the beauty of it. You get paid, yes, and you really help someone. Now, I hope you don't ever have to do a short sale. I really do. The market is shifting right now. We were in a place a couple years ago where things are flying off the shelves and the prices were appreciating so rapidly. But typically, you need to own a house. Historically, you need to own a house for at least 3 years to break even. And that hasn't been true lately. So you start looking at people. If people bought their house 5 years ago, today they're good. But people who bought their house last year, they may not have had much gain at all in the value. And if they need to sell for some reason, then these are people who might be primed for short sales coming up in the future. So I think we're going to start seeing it. I don't think we're going to be inundated with them, but I think we're going to start seeing them. And you can help people. So what else do they do? Mortgage modification. They may be able to do a deed in lieu of foreclosure. That's cash for keys. They may be able to call the lender and say, hey, can't make the payments, got to move, job transfer, wife's left me, and I got to do something with this house, and I don't really want to go through a foreclosure or short sale. Can I just give you the keys back? And sometimes they let them do it. It's called a deed in lieu of foreclosure, a deed instead of foreclosure.
Then what happens to the house?
It goes back to the lender and they do sell it.
Is it technically a foreclosure?
It's a deed in lieu of foreclosure. It's a little bit different standing.
But they sell it as an REO?
Yeah, because they own it, because they're giving it back to them. Yep. And then there's other legal resource, which I mentioned before, is that you can get an attorney who does foreclosure avoidance, and they might be able to get you out of it, or they might try to get you to do a mortgage modification, or do a deed in lieu, or send you for a short sale. They will give guidance on what is the best way to proceed, and they might try the least invasive first, and then move down the line. Always try. Historically, foreclosure has been the worst option for people. Now, in some ways, you could stay in your house for 5 years maybe without making a payment, and that's good, but your credit's screwed the whole time. You're not buying a house again anytime soon, and it's going to stay with you longer than these other options will. Most of them can be resolved in 2 years or less. Foreclosure is going to be longer. And then what's the last thing on here that's super important? Legal and financial advice. Don't give it. We are real estate agents. We stay in our lane. They should talk to their financial advisor, CPA, tax preparer, whoever it is, because sometimes, and their attorney, if they don't understand what's going to happen legally. So just so you know, debt that is written off, you might get a 1099 for that. So if, let's say the bank writes off 100,000 in debt, they might get a 1099 for $100,000. Yeah. Because they got it written off. Like, you took that debt, somebody gave you the money to buy that house, and now you're not paying it back, so you're gonna get taxed on it. Now, there's a thing called a deficiency waiver that says, where the bank says, I will not come after you for the amount that I wrote off. They're waiving that deficiency, but then you're probably gonna get a 1099. Or if they don't get a deficiency waiver, that means the bank could come back to you and try to get that money from you later. Like, let's say you won the lottery and they heard about it. They go, oh, I want that $100,000 back, and they can come back and get it.
They used to have time frame.
And I don't know. It's rare to see it happen. I'm telling you that it can, but it's very rare to see them come back later and try to claim it. Most attorneys, you've been through this process with an attorney, if you get a 1099 later, they'll find a way to have you file for bankruptcy and get rid of that. So it's whatever. Certifications you can get, CDPE or the SFR, if you're interested in this, look for these two. They're courses you take, and then you get a certification afterwards. Oh, I'm sorry, somebody take a picture. Certified distressed property expert and short sales and foreclosures resource. And then there's my information. If you would like to stay a few more minutes, I'd plan to be here till 12:30, so I can show you on MLS where you see short sales and foreclosures. And I'll also pull up IMAP and show you what it looks like when there is a lis pendens filed, what might be a red flag when you're doing a listing. Whether you're doing it as a short sale or not, you want to know this when you're listing a property for sale, right? Yes, absolutely. Okay, but if you need to leave, I understand. Oh, you do? Great. Okay, so let me pull that up real quick. You going? Love you too, bye.
Been a pleasure. Next week.
I'll meet you outside.
No, I know, you know that like, it's gonna hurt the future. You shouldn't, you should already take off.
Yeah, you told me.
Reset it.
Was going to.
Yeah, sometimes it takes like a 3 days. So that's good. I'm glad, happy to get this one kind of.